This program provides education, not advice. Sponsors pay a fee for endorsements and interviews. See the truthayf.com disclosure page for details.
This is where technology, innovation, and personal finance come together.
This is the truth about your future with Rick Edelman. Brought to you by Global X ETFs, dedicated to providing investors with unexplored intelligent solutions, and by Invesco QQQ. Anyone can become an agent of innovation with Invesco QQQ. Invesco Distributors, Inc.
It's Tuesday, December 5th. We talked yesterday about how developers are responding to climate change by building floating cities and floating buildings. As cool as that is, I'm not sure that's going to do as much good for the current real estate situation as we need. That's being damaged not by rising tides, but rising interest rates. WeWork, as I'm sure you've heard, is the latest real estate company to go bankrupt. Lots of real estate landlords and developers and builders, they're all going broke, but WeWork is different. I'm not sure you understand how big a deal this one is. The company is an office leasing company. If you're a startup working alone or a sole proprietor, like running your own accounting firm or consulting practice, you can't afford to lease a big office, and you don't need to. You just need a single office, but you want amenities. That's what WeWork does for you. They have a receptionist and a lobby, a lunchroom, conference rooms, and you get to hang around with other people who are in the same situation. So you have a built-in community. WeWork has nearly 800 locations in nearly 40 countries. 47 offices just in New York alone, where it leases 7 million square feet of office space. But WeWork vastly overestimated the number of people who would want to rent space like theirs. New York already has a 20% vacancy rate for its office buildings, and now we're piling WeWork on top of it. The result of all this glut of space? The value of these buildings is expected to fall 50 to 60% next year. The owners of those buildings aren't going to get the rent money that WeWork owes them. And they've got their own loans to pay. They've got to refinance their loans just as interest rates have skyrocketed. So their loan payments are up at the exact moment their rental income is down. Bad combination. One building in New York City was appraised 5 years ago for $127 million. It's now valued at $42 million. This is going to play out all over New York and all over the country and all over the world. It'll take several years for this all to shake out. The big losers here are not just the real estate landlords. The banks that lent them money are losers too, because the landlords are going to default on their loans. Most of those banks are small, local, and regional banks. Some of them might go out of business. And the big investors of those office buildings and those banks will be losers too. And guess who they are? Insurance companies, pension funds, and college endowment funds. See, compare this. When you look at your brokerage account online, the prices of your investments are shown in real time. You see the actual current value of your holdings. But that's not how pensions and endowments do it. They don't mark to market. They only update their prices once or twice a year. So they're mostly still showing their investments in real estate at old prices, the old values, before rising interest rates took effect, before companies began defaulting on their rent obligations and on their loans. Pension funds and endowments are showing prices on their books that are 50% higher than the real prices. And soon they're going to have to update. And when they do, watch out. They will report investment losses for 2023, not gains. Like I said, all this will get shaken out over the coming years. Today's losers will be replaced by future winners, the investors who buy these buildings and these loans today for pennies on the dollar. Urban areas will be redeveloped to meet the needs of residents for decades to come. Lots of exciting investment opportunities here for good investment advisors and for good investors smart enough to hire them. And since I brought it up, let me give one such idea about an investment opportunity that's available today, thanks to the very thing that's bothering you. Stock market volatility. Normally, when people get scared about volatility, they sell. But there's another approach you might want to consider. Buy investments that capitalize on volatility, and one of them known as covered calls. Covered call writing is an options trading strategy. Here's how it works. You own a stock. Let's say it's worth $10 a share. You give somebody the right to buy it from you for $12. They've got 3 months to do this, and they pay you $1 for the privilege. Since the stock is worth $10, you just made 10%. That dollar is 10% of the value of your stock. If the stock rises to $12 within 3 months, that guy is going to exercise his option. He'll buy the shares from you. That means you just made another $2 a share. That's another 20% gain for you. If the stock doesn't rise to $12 during the next 3 months, the guy won't buy your shares, and that means you can repeat the process, earning another $1. And you just keep repeating this until the stock does rise above $12, and the buyer exercises his option and buys the shares from you. Either way, you win. You collect those dollar payments, and you collect the $2 profit when you finally sell. And if you never sell, you keep earning those dollar payments. Now, there are 2 downsides to this. First, the stock could fall in value. You'd suffer a loss if that happened, but at least you've got those dollar fees you've been collecting to offset the loss. And by the way, those fees you're collecting are taxable. There's another downside. If the stock rises to, say, $20, you're still going to sell it for $12. You collect $2, but the other guy collects $8. That's why he's willing to do this deal with you. He thinks the stock is going to rise a lot more than just $12. So the downside of this strategy is that you're limiting your upside. But you're collecting that fee, which helps, and you're guaranteed to get it no matter what happens to the price of the stock. If you're worried these days that the stock market might fall, or if you just want to generate more income from your portfolio than you can get from dividends, covered call writing is a really good idea. But one thing, engaging in options trading is complicated and time-consuming. For most people, it's a hassle. So here's a better idea. Instead of buying stocks and trading options contracts on them, just buy an ETF that does all this for you. Global X has an entire suite of covered call ETFs with more than $10 billion in assets, proving that investors really like this idea. Their 3 most popular ETFs are the tickers QYLD, XYLD, and DJIA. They write covered calls against the NASDAQ 100, the S&P 500, and the Dow Jones Industrial Average. Last time I looked, the yield for Q yield was 11.9%. The yield for X yield was 13.4%, and the yield for DJIA was 9.8%. Remind me, how much are you getting in stock dividends? Not that much. The Global X NASDAQ 100 covered call ETF, the Global X S&P 500 covered call ETF, and the Global X Dow 30 covered call ETF, symbols QYLD, XYLD, and DJIA. Check them out at globalxetfs.com, or if you're an investor, ask your financial advisor about them. Let me change topics now. Even though Bitcoin's been around for almost 15 years, there's still no spot Bitcoin ETF. That could all change any day now. I expect the SEC to approve these ETFs at any time. Do you know how to answer your clients' questions about Bitcoin? With these ETFs coming, you can't afford to wait. You need to get the knowledge you need right now about crypto so you're prepared and ready to help your clients. When these ETFs enter the market, your clients are going to call you asking you for your opinion. You need to show that you have that knowledge, and the best way for you to do it is to get your CBDA designation, become certified in blockchain and digital assets. It's offered by DAC-FP, my sister company, the Digital Assets Council of Financial Professionals. It's online, self-study, self-paced, and listed in FINRA's database of professional designations, just like the CFP, CFA, CLU, CHFC. You need to serve your clients. You need to prepare and build your practice for the future, and the CBDA designation helps you do both. Enroll today and get your CBDA designation. The link is in the show notes.
Landmark infrastructure legislation was passed in the last Congress. Now comes the work of getting it built. The Global X U.S. Infrastructure Development ETF, ticker PAVE, invests in dozens of companies helping shape the future of American infrastructure. Investing involves risk, including possible loss of principal. Investments in infrastructure-related companies have greater exposure to the potential adverse economic, regulatory, political, and other changes affecting such entities. Before investing, carefully consider the fund's objectives, risks, charges, expenses, and more in the full or summary prospectus at globalxetfs.com. Read carefully. Distributed by SEI Investments Distribution Company.
Support for Rick Edelman's podcast comes from Invesco QQQ. Meet Carmen, an everyday person who likes working in the garden, hosting dinner parties with friends, and listening to live music. She also participates in Progress by investing in a fund that supports innovative ideas. Invesco QQQ ETF allows you access to innovators of the NASDAQ 100, so you don't have to be an engineer to help push progress forward. Anyone can become an agent of innovation. Learn more at Invesco.com/QQQ. There are risks when investing in ETFs, including possible loss of money. ETFs' risks are similar to those of stocks. Investments in the tech sector are subject to greater risk and more volatility than more diversified investments. The NASDAQ 100 Index comprises the 100 largest non-financial companies on the NASDAQ. You can't invest directly into an index. Before investing, carefully read and consider fund investment objectives, risks, charges, expenses, and more in prospectus at Invesco.com. Invesco Distributors, Inc.
Making the complex simple. Insights you can only get right here.
This is the truth about your future with Rick Edelman.